Hey, Steve Saretsky here. As always, if you get any sort of value or entertainment out of these videos, all I ask is that you hit thumbs up, subscribe. I appreciate the support. As always, if you have any questions or comments, put those below and we'll banter back and forth. Quite a few things happening this week that I'm going to touch on. First and foremost, RBC released their Affordability Index update. So they basically consistently update their affordability indexes for each particular city. They have Vancouver registering the most unaffordable reading in Canadian history. So dating back to 1985, their metrics recently hit an all-time high, and they said that affordability has been completely eroded in the city, and it has never in Canadian history, not only in Vancouver history, but been this high. So that was also not only the detached market, but the condo market. So obviously, in the detached space, may not be so much as prices rising, but obviously higher borrowing costs. So those have been factored into the affordability index. The detached segment, again, dating back to 1985, is 69% above the historical average. So the affordability index today is 69% above the historical average for that Vancouver detached market, as well as condos obviously hitting an all-time high. And just looking at sort of what's happening in that Vancouver condo market, we're starting to see obviously a sag in the detached market with sales hitting a 27-year low for the first quarter of 2018. And as you're seeing some sag in prices, particularly at the higher end, the condo market is still ratcheting higher. And that's particularly because I think what I'm seeing in the market driving forward, and I mentioned this in a call that I did just earlier this week with Dominion Securities, speaking with their VP there, basically providing a phone call to all of their financial advisors across Canada. These guys are managing billions and billions of dollars. So everybody's trying to get a read on the Canadian real estate market, obviously its impacts for bank lending, obviously bank stocks, financials, etc. And when they're managing this much money in the economy, they really need to know what's happening. So a feet on the ground perspective. And basically what I told them was what's driving the market higher is a lot of first-time buyers. I think they're the most active in the market today. And you can see that with price growth. All that price growth today is pretty much happening in one-bedroom segments and in more affordable two-bedrooms. Those are the ones that are ratcheting higher and higher. And so you're seeing one-bedroom condos in Richmond selling for close to $1,000 a square foot in newer builds. Obviously, Wally, Langley, those areas, prices are up about 40% on an annual basis. It's getting to the point now where if you look at the Real Estate Board of Greater Vancouver's median sales price for one-bedroom condos, so again, this is for Greater Vancouver, as of March 2018, it sits at $540,000. So the median sales price for a typical one-bedroom in Greater Vancouver is $540,000. Now, obviously, I mean, if you take Stats Canada's data and apply it here, which says that the typical household earns $79,000 in income annually, that would technically mean that a family can't afford a typical one-bedroom condo now in Greater Vancouver. So again, that's per CMHC's guidelines. I believe their guidelines are you shouldn't be spending approximately 32% of your income, your monthly income on housing. So anything above that. So obviously, if your median sales price for one bedroom is $540,000, this now quantifies as saying that the typical family can't afford a one-bedroom condo. Now, obviously, trying to squeeze families into one-bedroom condos is probably not going to work very well. So this is a very interesting dynamic, right? I mean, at some point, you have to think that this is going to break, where families, again, do people just eventually move away? Do governments come with more regulations? Do higher interest rates push affordability costs higher? And then, again, that's all speculation. Nobody knows how this all plays out, but the simple math paints a very grim picture, obviously, for long-term sustainability, consumer spending, if you're spending that much. Getting back to the RBC Affordability Index, it was noted that the average takeaway income now, it's going to require about 85%. So if you're buying a typical home in Vancouver today, or sorry, in Greater Vancouver, it's about 85% of one's takeaway income. So that's where RBC came in. Again, you can sort of use the numbers how you see fit. I would argue that average incomes were probably higher than 79, but even if you maybe push them up to be generous and call it 100,000, the numbers are certainly quite interesting. Which really brings me back to, again, looking at the bigger picture, tying this all in together. As we're seeing, obviously, house prices reach these crazy levels. We're starting to see sales come down, not only in Vancouver, but in Ontario. But from a national perspective, so for the first quarter of 2018, national home sales declined 16% on an annual basis. So again, that's comparing Q1 of 2018 to Q1 of 2017. It was 16% annual decline. This now brings us Q1 sales for 2018. We're back at about 2014 levels. So that's pretty much pre-housing boom, just before things really started to ramp up and take off. So that's where we're at nationally with sales. And again, obviously, as sales start to slow down, that has greater impacts on the overall economy and how the Bank of Canada chooses to move forward, etc. I mean, obviously, looking at some data from Macquarie Research, they have Canada's national residential investment as a nominal percentage of GDP is now 2 standard deviations higher than our historical average. Again, that's the nominal residential investment is 2 standard deviations higher than our historical average. So that basically shows you how much emphasis the economy has on real estate, particularly over the last 5 to 10 years. So when national home sales start sliding, 16, 17, 18%, that's going to have a wider implication. And you're seeing that in the dollar volumes as well. So looking for that, again, when you extrapolate back into a bigger picture, the Federal Reserve is clearly intent in the United States on hiking interest rates forward. Recent minutes from Jerome Powell, the Fed chair, they're basically pricing in. They're really still forecasting moving ahead with 3 or 4 interest rate hikes in the United States this year. Not only to mention that they are doing quantitative tightening, which is basically reducing the Federal Reserve's balance sheet, and that if they get to their quota, if they actually follow through with all the tightening that they've basically planned and estimated, it actually works into about the equivalent of another 2 rate hikes. So you could potentially be looking at 4 to 6 interest rate hikes in the United States. Now, obviously, the Bank of Canada tends to typically follow, but the question becomes, can they follow? Again, as national home sales slide, as prices start to pull back, I believe in March, on a year-over-year basis, the average sales price nationally declined by 10%. So you're in the midst of, I would call it, a decline in the real estate sector. How much can you really hike interest rates? And now obviously that brings into question, if they don't follow, what happens to the valuation of the Canadian dollar? It's already the worst performing currency in 2018, or one of the worst currencies performing in 2018. So that could potentially erode the value of the Canadian dollar. Of course, that could potentially spur on some higher inflation. And then what does the Bank of Canada do then? Do they start fighting a higher inflation, or they just let it run hot? I think one of the theories that's out there from a lot of respective economists is, like, if home prices should start to slide, if the value of the Canadian dollar starts to decline, it could ultimately help stabilize home prices through inflation. So even though your home prices won't be going up, the inflation will sort of kick in, and it'll sort of mask a decline in home prices. Again, this is all very hypothetical. Nobody knows where house prices are going to go, but you sort of have to start to wonder how this is all going to shape up, with obviously some tightening happening in the United States, globally, and then look at the precarious situation that is Canada. So anyways, yeah, I don't want to ramble on too much. I want to keep this video short and concise, but some things to think about. Again, obviously, affordability index is hitting an all-time high. National home sales starting to roll over, and the implications of that for the Central Bank of Canada. So we will see. As always, we'll update you every single week. That's all I got this week. See ya.